Hello everyone. So now today we will take up with the question where we have to make profit and loss statement as well as balance sheet. Question number 5 of your study material. Every one of you take it out. Now you already know the markings which we have been doing for P&L statement. Okay. Rooms, food and beverages, swimming pool and spa, SW, game zone, G, rental and other services, R and OS. Then administrative, sales promotion, property operation and maintenance, and fixed costs. Rest in DPs, okay, rates and taxes, insurance, interest, depreciation, and profit or loss on sale of assets. These are for P&L statement. Now we understand what markings we have to do for balance sheet. Okay, first of all of you recollect in the last lecture what did we study the balance sheet format. Okay, equity and liabilities. Equity means shareholders' funds. In that, share capital and reserves and surplus. So S, C, and R and S. Then liabilities, two kinds of liabilities: non-current liability and current liability. Non-current liability, long-term loans. In current liability, trade payables TP and other current liabilities OCL. So these markings will do for liabilities side. Assets side, only two main headings: non-current assets and current assets. In non-current assets, fixed assets and long-term loans LTL. Now these are long-term loans taken, these are long-term loans given. So LTL in bracket you can write a asset side, okay, the ones which come on asset side. And in current assets we have inventories, so I, then trade receivables TR, cash and cash equivalents CCE. These markings we will do for balance sheet. So let's proceed with the markings of question number 5. From the following information of AFS Hotel, prepare statement of profit and loss and balance sheet as on 31st March 2019. Cash in hand will come in cash and cash equivalents CCE. Cash at bank also cash and cash equivalents CCE. Accounts receivables are trade receivables debtors TR. Hotel building is fixed asset FA. Furniture and equipment fixed asset FA. Motor vehicles fixed asset FA. Other current liabilities OCL. Long-term loans unsecured, long-term loans LTL. Linen, glassware, china and silver fixed asset. Mark this important. Don't take it as other expenses of room. We are talking about the linen. Linen means the bed sheets, etc. Glassware, china and silver also. Silver articles, artifacts, etc. in the hotel. All these things are fixed assets. They remain in the hotel for long period of time. Accounts payable, trade payables in liabilities. Stock on hand of food inventories. Stock on hand of beverages inventories and stock on hand of supplies inventories, gift merchandise inventories. All these are under the heading of stock on hand. Capital, share capital SC, long-term loans secured. So again long-term loans LTL. Both of these are liabilities. If it is loan given, they would mention exclusively that it's loan advanced or given. Deposit from customers. We have taken deposit from customers. So it is other current liability. Against that, we have to provide them service of staying in the rooms or hotels, etc. Whatever it is. Our customers have given us the deposit, means against that they are going to take the services from us in future. So for us it is other current liability. Room sales, it will come in directly sales column. R. Salaries and wages, okay, this will come in sales column. Salaries and wages will come in employees benefit column and room, so R. Cleaning, other expenses of room, so R. Food and beverages, again sales, so it will come in sales column but food and beverages. Okay, sales column of food and beverages. Cost of food consumed will come in cost of sales column, food and beverages. Salaries and wages will come in employees benefit column, but food and beverages. Additional information means adjustment, so they will have two effects. First, outstanding rates and taxes. Now, outstanding rates and taxes. So, very first of all, we have to take it in fixed cost, rates and taxes, rest in DPs. Rest R stands for rates and taxes. So, one effect will come in fixed cost, and second effect it will come in other current liabilities. Okay, outstanding, so it will come in other current liabilities in balance sheet. Depreciation on hotel building, furniture and equipment and motor vehicles. So, one effect we will minus from fixed assets. Which all fixed assets? Put tick on them. Hotel building, furniture and equipment, motor vehicles. Put tick on them so that you remember when we come to those items we do minus depreciation. So put tick. And second effect of depreciation rest in DPs. Depreciation comes in fixed cost. Accrued expenses means outstanding expenses. So insurance will come in fixed cost. Interest will come in fixed cost, and other outstanding expenses will also come in fixed cost only. Okay, and all of them will also come in other current liabilities. Outstanding expenses, so they will also come in other current liabilities. Okay, so these markings we have already done. Now all of you just keep this one thing in mind. When we make the notes, first we will make the notes of balance sheet always. Okay, keep this in mind. First we have to make the notes to balance sheet. Then we will make the notes to P&L statement. So note number 1 will start from balance sheet items, share capital onwards. Once all the notes of balance sheet are over, suppose 10 notes are covered in balance sheet, then P&L statement we will start with 11th note. Okay. First we will always make the notes of balance sheet, then we will make the notes of P&L statement, and we will give the numbers also accordingly. However, in the beginning all of you make the format. You can pause the video and make this format of departmental profit and loss statement, what we have been doing in this columnar form earlier, and also make the format of balance sheet, what we studied in the last lecture. Balance sheet format, equity and liabilities. I am not discussing P&L statement format because we have been doing a lot of practice for this in past. So I am quite sure you all already remember this. But balance sheet we are doing for the first time, so look at that format once again. Equity and liabilities, shareholders funds, share capital, reserves and surplus, two things in that. Non-current liabilities, long-term loans. Current liabilities, trade payables and other current liabilities. Asset side, non-current assets, fixed assets and long-term loans. Current assets, inventories, trade receivables and cash equivalents. So all of you pause the video and make the format of P&L statement and balance sheet. Okay, and then once you are done with the format, then we take up with the notes to P&L statement as well as balance sheet. So pause the video and make these formats, everyone. Yes, so I hope everyone is done with the format of P&L statement as well as balance sheet. Now we will make the notes, okay, and here also you all can see the figures are actual. They should not be in thousands. Cancel this part. They should not be in thousands. They are actual figures only, okay. Yeah. So first we will be making the notes to balance sheet. So all of you give the heading notes to balance sheet. First give the heading notes to balance sheet. Okay, after completing the notes to balance sheet, then we will make notes to P&L statement. Now first note we will be making for share capital. First note will be making for this item of share capital. Okay, so first note will come for share capital. Let us see in the information, we have already marked it as share capital. SC. Okay, this capital, all of you can see, capital is 498,100. That will come in share capital, capital of 4,98,100. Only one item, so total also 4,98,100. Okay, notes to balance sheet we are making first. Then after that, the next item, second is reserves and surplus. Now, do we have any item marked as RS in the trial balance? You can consider this as trial balance kind of a thing. You can see no item is marked as RS, but still you always will write reserves and surplus because the final balance of profit and loss statement will come over here. So reserves and surplus, you all can give the heading, okay, and then this final balance of P&L statement, this net profit or loss what we get, it will come in reserves and surplus. You can keep space for that. Net profit, okay, net profit will come here, but right now we keep it pending because amount will be obtained only after we complete profit and loss statement. So I repeat, reserves and surplus, all of you will keep the space blank, okay, provide the space for that, but amount will come after we make profit and loss statement. Then third note will be for long term loans. You all can see after reserves and surplus non current liabilities we have long term loans, and we do have long term loans in this question. So long term loans, now long term loans, two items are marked as long term loans. One is this long term loan unsecured of 10,000, and the other is this secured of 1 lakh. So unsecured is 10,000 and secured is 1 lakh. So total long term loans are 1 lakh 10,000. Then fourth note will be trade payables. After long term loans in current liabilities, you all can see we have trade payables. So fourth note will be of trade payables. Okay, fourth note will be of trade payables. Now in trade payables, what all things do we have here? Only one thing we have, I think, account payable. Account payable 15,000. Put tick on that, account payable 15,000. Okay, account payable 15,000. Then after trade payables, we have other current liabilities. Also don't forget to see the adjustments to give the effects. Other current liabilities. Now what all things are marked as OCL? Very first in other current liability, directly other current liability of 2000 is there. Okay, directly other current liability of 2000 is there. Other current liability 2000. Then after other current liability 2000, what is the other thing marked as OCL? Deposit from customers 1400. All of you can see that. So deposit from customers 1400. Okay, deposit from customers 1400. Then in the trial balance, do we have any other item marked as OCL? No. Now look at adjustment. First adjustment, outstanding rates and taxes 1500 is also marked as OCL. So outstanding, you can give one heading because many things we have in adjustment as outstanding, and within outstanding you can write rates and taxes 1500. Then which other outstanding expenses we have in adjustments? Adjustment 3. Insurance of 4500 is also marked as OCL. Outstanding insurance 4500. Then same adjustment 3 after outstanding insurance, what else is marked? Interest of 9000 is also marked as OCL. So outstanding interest 9000. Then after outstanding interest, outstanding other expenses of 8000 are also marked as OCL. So outstanding other expenses 8000. Okay, any other items marked in the question as OCL? No, we don't have any other items. So total would be done. Total of current liabilities, other current liabilities 2000, 3000, 4000, 8000, 17, 25, 26, 400. Okay, total other current liabilities are 26, 400. Did you understand this? So liabilities side all are done. Now we go with asset side. So total 5 notes we have already done. We go with asset side, note number 6, fixed assets. Okay, in asset side we have note number 6, fixed assets. Now in fixed assets we have what all things marked as fixed asset? Hotel building, and we have put tick on hotel building because there is depreciation, so that also we have to remember. Hotel building 2,50,000, write it in inner column. Okay, hotel building 2,50,000 in inner column. From that we will minus depreciation 44,000 from adjustment 2. So outer column 2,06,000. Okay, outer column we will have 2,06,000. Okay, here you can see depreciation on building is 44,000. Then after depreciation, okay, furniture and equipment is, hotel building is done. Furniture and equipment is 1,20,000. Furniture and equipment 1,20,000. From that we will minus depreciation. Now again look at adjustment 2. What is the amount of depreciation on furniture and equipment? 27,000. So 1,20,000 minus 27,000 is 93,000 in outer column. Then after furniture and equipment, which is the next fixed asset, we have motor vehicles 32,000. Okay, motor vehicles 32,000. From that again we will minus depreciation as per adjustment 2. So if you refer to adjustment 2, the depreciation on motor vehicles is how much? 12,780. So 12,780 we will minus. Outer column we will get 19,220. Okay, outer column we will get is 19,220. Then what other thing do we have marked as fixed assets? You all can see here. Linen, glassware, china and silver 28,500. Okay, linen, glassware, china and silver 28,500. No other items marked as fixed assets. What is the total? 2,06,000 plus 93, 2,99,000, 3,09,18, 3,00,000, 46 720. 346 720 is the total of fixed assets. Okay. Now, after fixed assets, what is the seventh note we have to make? Long-term loans, but we don't have. Long-term loans, I told you long-term loans, asset side in bracket will mark it as A. But we have two long-term loans, both are secured and unsecured liabilities only. Any long-term loans advanced or given is not given. So we don't have that. We directly go to current assets, inventories. That we do have it. So note number 7 will be inventories. Now what all do we have in inventories? All this stock on hand of food 15,000. Okay, inventory of food is 15,000. Then after food, what do we have? Beverages 46,000. Okay, beverages inventory is 46,000. Then after beverages, we have supplies of 6,500. Okay, supplies of 6,500. Then after supplies, gift shop and merchandise of 10,000. Gift shop and merchandise of 10,000. That's it. Do we have any other item marked as inventory or I? No, only these 4 items are there. So total inventory in the hotel is worth how much? 46, 61, 67, 77,500. 77,500 the total. Okay. 77,500. Then after inventories we have cash and cash equivalent. So note 8 will be of cash and cash equivalents. Okay, note 8 will be of cash and cash equivalents. In that we have cash in hand 1,94,820. Cash in hand 1,94,820. And next is cash at bank, that is 89,000. Okay, cash at bank 89,000. So 2,83,820. Total cash and cash equivalent is 2,83,820. So I hope everyone is clear with this. Now next, notes to P&L account. Notes to profit and loss statement. As I said, first we will make notes to balance sheet, then we will make notes to profit and loss statement. Now in profit and loss statements note, I told you that we make notes only for other expenses, but you all can see only one item of other expenses is there, that is cleaning of room 42,000, for which we need not make the notes separately. So no notes will come regarding profit and loss statement. However, I suggest that you can make note for depreciation because there are 3 amounts. So we can make note for depreciation so that when we come to profit and loss statement, we have the total amount available. Okay. 8th note was of cash and cash equivalent. So 9th note will be of depreciation. Three depreciations are there. Depreciation on hotel building 44,000. Then furniture and equipments. Here we have 27,000. And motor vehicles, we have here 12,780. So just for depreciation, we have made a note because there are more than one amounts: 40, 60, 70, 74, 81, 83,780. Other notes to P&L statement we don't have. We make note only for other expenses. In other expenses, only one item of room is there. Food and beverages, there are no other expenses. Swimming pool and spa, game zone, rental and other services, administrative, sales, promotion, property operation and maintenance, we don't have only in this question. So therefore, we are not making any other notes to P&L statement. Okay. Now, I hope everyone has already done with the formats of P&L statement and balance sheet. So we proceed putting the amounts, doing fill in the blanks in these two formats. First, rooms, sales. Directly we get it from the top. What is the sales of room? You all can see here, 3 lakhs. So all of you write down sales of room 3 lakhs. Okay, room sales all of you can write down as 3 lakhs. Then cost of sales. Now all of you can see in room the cost of sales is never going to be there. We have studied it earlier also. Employees benefit of rooms, this you can see salaries and wages of room 1,58,000. And other expenses of room include this cleaning expenses of 42,000. So 3 lakhs minus 1,58,000 minus 42,000 means 3 lakhs minus 2 lakh. You can say profit or loss is 1 lakh. Rooms profit and loss is 1 lakh. Then food and beverages now. For the sales of food and beverages, you all can see here. Food and beverages sales are 1,50,000. Cost of sales also we have for food and beverages 45,000. Employees benefit also salary and wages we have for food and beverages 13,680. Other expenses of food and beverages we don't have. There is no item marked in other expenses. We marked in a different ink. We don't have it. So 1,50,000 minus 45, 1,05,000 minus 13,680. So 91,320. All of you verify that in the calculator. 91,320. Swimming pool and spa, we don't have this department in this hotel. Game zone department in this hotel is not there. Rental and other services department in this hotel is not there. So 3 lakhs plus 1,50,000. 4,50,000 is gross operating income. 45,000 cost of sales. 158, 68, 71, 680. Employees benefit. 42,000 other expenses. And total profit or loss 1,91,320. Okay. Now, unallocated operating expense. Here onwards, the last column will represent total. We don't have administrative, we don't have sales promotion, we don't have property operation and maintenance. And so 191,320 minus these all, same 191,320 itself becomes the operating profit or loss. Now fixed charges, rates and taxes. Adjustment 1, we have marked it as 1,500 rates and taxes. 1,500. Insurance. Adjustment 3, insurance we have marked as 4,500. So insurance 4,500. Remember adjustments have two effects. So we have marked all the adjustments with two effects. Interest we have marked 9,000. So there is a second effect now we are giving. One effect we have already given in the notes to balance sheet. Second effect of all these adjustments we are giving in P&L statement. And depreciation and amortization we have made the note. note number 9 for 83,780. So we'll write this note number 9, 83,780. And profit or loss on sale of assets we don't have, but this other accrued expenses of 8,000 we can write it in fixed costs as we have marked them as fixed costs only. So that will come in this P&L statement only. What you can do is you can cancel this profit or loss on sale of asset which we don't have in this question, and instead of that you can mention others. Okay, other expenses are as given in the question, last adjustment 8,000 rupees. So instead of P&L profit or loss on sale of asset we can have other expenses, others. All these amounts we have to minus. So 191320 minus 1500 minus 4500 minus 9000 minus 83780 minus 8000. You must get 106780, the total amount of these. If you subtract, then you'll get 84540. Profit before tax must be 84540. Okay. Income tax is not there, so profit after tax or net profit is also 84540. Okay. Now this net profit, profit after tax 84540, this amount we shall show in reserves and surplus 84540. I hope everyone is clear with this. Okay. Now we will make the balance sheet. Okay. Now we will make the balance sheet. So now if we make the balance sheet, all of you can see here, shareholders funds, share capital we have made note 1. What is share capital amount as per note 1? 498100. Write it in inner column 498100. Then note 2 we have for reserves and surplus 84540. 84540. So what are the total shareholders funds? 490, 570, 578, 5,82,640. Okay. Then non-current liabilities, long-term loans we have in note 3, that is 1,10,000. Only one item, so you can directly write it in outer column. Then trade payables we have in note 4, you all can see 15,000. Only one item was there. Okay. So 15,000. Inner column. And other current liabilities from note 5, 26,400. Okay, 26,400. So total 15 plus 26, 41,400. And total of liabilities side 582, 682, 692, 733, 734. 040. All of you do it in the calculator. Do you get 734,040 or not? Verify that. Now non-current assets, fixed assets from note 6 we get 346,720. Then long-term loans given we don't have. So total non-current assets are 346,720. Then current assets inventories from note 7 we get 77,500. Then trade receivables from note 8 we get. Okay, trade receivables we forgot to write. So this cash and cash equivalents will become note number 9. 8 would be trade receivables. Okay, trade receivables, we all have it in the question. Accounts receivables, TR we would have marked. Here we have it, 26,000. So accounts receivables 26,000. Total also 26,000. And accordingly, note to P&L account, this profit and loss statement would become note number 10. Okay, so in P&L statement, you all can mark this as note number 10. Now trade receivables from note 8 we get 26,000. Okay, and lastly cash and cash equivalents from note number 9 we will get 2,83,820. So total 280, 3 lakhs, 370, 377, 383, 386, 387, 320. And total of balance sheet must tally. So 3, 6, 6, 40, 7, 20, 7, 7, 33, 7, 34, 0, 4, 0. It does come. 734040. Okay, balance sheet must tally. So I hope everyone is clear with this. In between, I did one mistake of not taking trade receivables. You all be careful with that. That's why you first make the format of balance sheet so that when you make the solution, you know which items are to be written in the order. So after 7th inventories, 8th would be trade receivables, 9th cash and cash equivalents, and then 10th note to P&L statement would be depreciation. I hope everyone is clear with this question. We'll try to give you more practice on balance sheet, but in college in the last year, only one example was done. So more examples of balance sheet are not available. If available, they'll be issued to you and the extra practice can be done in the live sessions. Okay. So take care everyone. See you in the next lecture and keep revising the formats of P&L statement and balance sheet. Bye-bye.